Hey there, everyone. Thanks for staying with us here on CBS News. I'm Errol Barnett.
And I'm Lana. It is 2 p.m. here on the East Coast and 11 a.m. in the West. We're just minutes away from learning how much the Federal Reserve will, in fact, raise interest rates by in the United States. The expected increase is 75 basis points, or 3/4 of a percentage point. This would mark the fourth such hike in a row for the Fed. The goal is to cool off inflation brought on by the pandemic recovery, the war in Ukraine, etc. But experts have predicted the continued aggression could cause a deep recession.
So as we wait for the numbers to be confirmed here live, let's bring in Jeff Taylor. You see him on the left. He's a member from the Mortgage Bankers Association and founder of Mphasis Digital Risk. We're also speaking with CBS News reporter Sarah Ewall-Wice, who you see on the right. A warm welcome to you both. Jeff, let's begin with you. Mortgage rates, right? One of the components of all of this that people really feel the most. They've more than doubled since this time last year. Just break down for us how the Fed's interest rate hikes could now make those numbers jump up even higher.
Well, first, thank you very much for having me today. It's a pleasure to be here. So if you're looking back in January, rates were at 3%. Now they're at 7%. The biggest question I keep getting asked in the housing market is housing affordable with a 7% interest rate? And it is. When you look at a couple of the data points, the average median home price right now is $392,000. So if you assume a 10% down payment, that over 35% of Americans can still afford to buy a house. So while we're raising interest rates to tame inflation, mortgage rates are still affordable, which has been a little bit of the contrary that people have been talking about.
And we just have gotten confirmation that, in fact, it is 75 basis points. The Federal Reserve has decided to increase those rates by. So, Sarah, you've been covering the midterms. I'm wondering how much you've seen voters having strong feelings about the Fed and Jerome Powell. Does the Biden administration get the brunt of their frustrations over these high prices and now this confirmation of another 75 basis point hike?
You know, I think when you're out talking to voters, it's not specifically the Fed or the Federal Reserve Chairman, Jerome Powell, who's getting a lot of the wrath of folks, or specifically the President of the United States, though more so the President than the Fed overall. When it comes to inflation and the challenges people are facing, and it doesn't matter if you're talking to Democrats, Republicans, or independents, everyone is saying that inflation is a problem. They all are noticing higher food prices. Of course, they're all noticing higher prices at the pump. But who they blame actually does come down more to who they're aligned with politically. We're less than a week out from a midterm election. If you ask Republicans, they're more likely to say President Biden's fault for soaring inflation, hitting a near 40-year high. But, you know, talk to Democrats, they're more likely to bring up supply chain challenges, the trouble coming out of the pandemic, the war in Ukraine. And so then it really comes down to who's driven to actually turn out and vote. But we have seen just a number of different people who've really focused on different aspects, though the problems for everyone are pretty much the same. It's too high, too fast, and they're having trouble making ends meet.
You know, one of the interesting data points reported on CBS Morning this morning was that some tens of thousands of mortgages, or at least home applications, were canceled this year because of this dramatic upswing in the Fed interest rate. Jeff, the Fed's Reserve will meet in mid-December next. What then do you think will be the strategy from here? Because too much of this could almost create inflationary pressures in a recession. If everybody knows prices are higher, they're going to want higher wages, and people will charge higher prices for things. So what do you think the next step will be?
So it's a good point. So let's take a look at why the Fed is doing what the Fed is doing. If consumers continue to believe prices are going up, they're not going to make that significant first-time purchase, whether it be a house or a car or what have you, because they're going to be unsure. So the Fed's in a tough situation, but doing what it needs to do of raising rates till we get to a point where we start to see price declination in different areas or stability. And if you look at the average median home price, we've gone down from $413,000 in June to $492,000. It is starting to work. That said, it's been challenging because consumers still, back to your point of the canceled applications, aren't like, are prices still going to go up? Should I buy now? Should I hold back? As the Fed, I think, comes with the next 50 basis points in December, hopefully this will be the last rate hike, and we'll start to see some seasoning. Things start to cool off. We won't have continued price inflation, and people will get more comfortable making that very large purchase, whether it be the first-time house, a move-up house, a car, or what have you. So the Fed's on track for what it needs to do. It's not easy, but we need to get through probably another 50 basis points before we see a cooling off period.
Jeff, I want to follow up with you on this point because while the median price point of homes may have gone down, people are still paying they're still paying as much, if not more so, because the interest rates have gone up. What we've actually eroded is what people have in terms of equity in their homes. And then to couple that with something else that I was reading today in the New York Times reporting about how these companies have actually continued to increase their prices beyond their inflationary pressures. The Fed doesn't control all of that. So how much are we just really seeing consumers, the general public, being hurt by all of this and these interest rate hikes going up, but not actually helping with those inflationary pressures as long as the companies realize that they can continue to charge more?
So again, I was talking about companies that continue to charge more. I mean, if it's mortgage lenders aren't charging more per se right now. So if home price appreciation, as you said, it has settled, okay, and it is coming down a little bit, but it's coming down on 2 years of 20% and 20% home price appreciation. It was not sustainable. Generally, 3 to 4 is. So what you're looking at right now is people can buy a house. Yes, home equity may be going down a little bit because we're not seeing the price appreciation. That said, if you're buying at 7% right now at the Mortgage Bankers Association, we think that 30-year fix is going to be somewhere around 5.8 at the end of next year. So you would be able to refinance. I think the bigger challenge to the question that you're posing is when's that confidence that prices aren't going to continue to go up? So somebody who's been looking to get in the housing market for the last 4 to 5 months says, you know what, I'm going to go ahead and buy. I feel like we've reached that price increase perspective. And then if I have a chance to refinance down the road, I will go ahead and do so.
Yeah, and Jeff, just to clarify, when I was talking about companies continuing to charge more, that was about restaurants, that was about retailers, that was about other companies, not in the home market space.
Yeah,
totally got it right.
Yeah.
So yes, it's the overall picture, right? It's a whole consumer spend they're looking at because it's the car, it's the food, it's the electric, right? It's the shelter, it's everything blended together. They have to feel really good about before they get out and either make the move up purchase or the first time purchase.
So the Fed made this official just a few moments ago. Sarah and Jeff, take a look at the Dow at the moment. On the news of the Fed raising interest rates, it just jumped more than 250 points after being in the red all day. Sarah, from your point of view, what does this tell us? What does this mean? And I don't know, does this hint that these types of things could be working? Or is it too much to read out of a single data point? Which I know is the actual answer, but Sarah, just reference what we're seeing now.
I think it's tough, but the reality is we saw the Dow was down ahead of this announcement, but there wasn't any surprise here, and I think that's a positive sign for investors, as they knew this was coming and they were selling because it was coming. But now that we have the official announcement, it wasn't bigger a hike than expected. And of course, we have one more hike expected this year in December, and then it becomes a question of, well, how much will they continue to raise the Fed funds rate next year, or will it slowly start to ease, as Jeff mentioned? But that is something to keep in mind here. The stock market recently has been pretty volatile, but we did know this number was coming.
Yeah, that's true. That's true as well. And Sarah, what then does this all mean, right? If this was what was expected, if a lot of folks on Wall Street had factored this in, and if this is, as Jeff mentions, is just part of the pain that has to kind of happen to tame inflation, is it possible at all that this is a wash for voters?
You know, when it comes to voters specifically, the economy is the #1 issue when we did our polling at CBS News and other polls that have been done across the country in different states as well as nationally. And, you know, it's something to keep in mind here is people are very frustrated about prices. It's interesting to see what the candidates have been saying on the campaign trail. I don't think any candidates, Democrats or Republicans, are dismissing inflation. They know it is the #1 issue. They know it is what voters are concerned about, and they've talked about it. The reality is Republicans talk about Democrats and blame Democratic policies for the inflation. Democrats have, to your point, have been talking specifically about some of the companies raising prices. I'm talking specifically about price gouging. I was at an event with Senate candidate John Fetterman, and he was specifically talking just this week about Shell's stock buybacks. So the messaging has been very different, but it hasn't actually been one side of the aisle talking about it while the other side isn't. It'll be interesting to see how much this plays a role on Election Day if we see those exit polling, too, about what brought people out.
Yeah, Jeff, we want to give you an opportunity also to respond to this. We know that the market's they loathe uncertainty, they love certainty, so in some ways it's not really a surprise that the markets would shoot up in hearing this news. But does that indicate to you anything more about the overall health of the economy and what our viewers right now should be doing as a result?
Yeah, again, I think it's what we talked about earlier, right? We put $10 trillion into the global economy post-COVID. The Fed is doing the tough work that it needs to do right now to level off prices. This is a confidence game. Consumers and viewers, if they are confident that prices aren't going up in all aspects of their life, when that has sort of plateaued, they will make those bigger, large purchases, whether it be the car or the home. So this is good news. The markets like predictability. That's why it's up 200. And I suspect you'll see the same thing when the Fed raises 50 basis points in December. And then at that point, I think we're going to be good for a while.
All right. We're looking for good for a while. That would be nice. All right, Jeff Taylor, Sarah Ewall-Wice, thank you both.